Hey everybody, hope everyone's doing well and had a good day. This video is a brief recap of the Emini 5-minute chart for Wednesday, June 25th, 2025. I want to try to keep it brief today, but I want to quickly talk about the context on the higher time frames. Here's the daily chart. Here's the information going into the day. Spike in channel, bull trend. Spike, pullback, leg 1, leg 2, leg 3, or it's 1, 2, 3, 4. Either way, late push here. So yesterday, reversal and follow through. It's a pullback to a trend line in a channel, but it's leg 3 or leg 4 for the bulls. Bulls breaking out to a new high, but late in a channel, expectation, sellers above prior highs, bulls are taking profits. Bears are starting to make money selling highs. It's a stairs pattern. So bears who sold this high, scaled in higher, able to make money. The odds are if you sell above this high, you're probably going to make money. And the market will pull back deeper, and this channel evolves into a trading range. A couple of targets lower here and here. But strong bars, big, strong bull bar, another big bull bar, more of an average sized bar, but closing on its high. The problem for the bulls is that it's leg 3 in a channel, and we may get a more complex correction, a couple of legs sideways to down, maybe half the bars in the correction may be half the bars that are involved in the channel. And that could be maybe 10 bars sideways to down for a couple of legs. But as far as selling here, you're selling against strong breakout and follow through in a bull regime. If you're selling the close of a strong bull bar, it's better if it's clearly a late leg at the top of a trading range or counter trend in a bear trend. So there's examples over here. Tight bear channel, many bars below the moving average, breakout follow through. It pulls back and then breakout follow through here, but that's the third push. Maybe 1 or 1, 2, 3 legs up against a tight bear channel. So selling there makes more sense than selling here. Expectation, probably disappointed bulls going into the day. Because of what I said earlier, it's a channel, so probably sellers at a new high. In this channel, more likely to evolve into a trading range. But this is stronger trend resumption than the bears wanted to see. So too strong to be selling against. So at this point, I think the bears may need a micro double top. It's possible they get a climactic reversal in the third leg, but we'll see. Here's the 5-minute. We had a gap up going into the day. And what's most recent? Bull channel, bear breakout and follow through. Getting below the most recent major higher low. Because of that, the market is either in a bear trend or a trading range on the open of the day. Market broke above yesterday's high, but never got consecutive strong bull bars. Bull bar 1, but trading range bar, and bull reversal bar 2, but an inside bar. Bad follow through 3. The gap up and the follow through will probably get a second leg, but because of the dynamic of the context leading into the day, spike in channel, bull trend, trend line break, retest of the highs, might be an expanding triangle, lower low, higher highs, which is a type of major trend reversal pattern. This is a higher high major trend reversals. If they do reverse the major trend from bull to bear, eventually there's a lower high. So it really becomes a head and shoulders, top, left shoulder, head, and right shoulder. 3 bars up on the open. Bar 1 unlikely to remain the low of the day. And this is too much selling. I thought 77, 78 yesterday converted the market into a trading range, especially because it fell below that major higher low. So probably sellers at a new high, but strong enough momentum with the gap up and follow through for a second leg. 3, 4, 5, 3-bar micro channel, down, big up, big down, maybe a 50% pullback of the rally. Bad buy signal bar 5, 3-bar micro channel with a micro gap, probably sellers above, second leg down, likely. Bulls still need a second leg, but now the bears need a second leg, so this may be a more complex pullback. Was bar 6 the second leg for the bulls? Breakout, pullback, second leg? It might be, but it's not a symmetrical second leg. It's sort of the minimum second leg. It retested the high close. There was a pullback to about 50% and a test of the highs, but what may be happening is it's a more complex pullback. Rather than the high one leading to trend resumption, the pullback momentum was too strong, trapped traders above, so they used 6 to exit, and then that contributes to the selling that leads to another leg down. But bar 9, some traders will count bar 9 as 3 legs down. 1, 5, and 9. 3 pushes down after a gap up. It might be a wedge bull flag. The expectation is that the gap up and follow through gets a second leg, but also wedges correct for a couple of legs sideways to up most of the time. So a couple of reasons to expect higher prices from here, especially bar 9, decent bear bar, but not closing below bar 5, and it's in leg 3. And then it gets bad follow through 10, 11, 12, 3 or 4 bar bull micro channel. Probably by the close, only want to look to buy. Now for always in, it's probably, well, it's unclear. The market's in a trading range at this point. But we had a bull trend leading to this trading range. Now because it's either a bear trend or a trading range because of the breakout below the major higher low, the bears are hoping this becomes a higher low, or a lower high, major trend reversal. So we get trend resumption to a new high, another trend line break, retest, and reverse the trend down. But this is too much overlap. The breakout and follow through from the gap will probably need a better test than bar 6, and the wedge will probably correct for another leg up. So 9 through 12, 13, this needs a second leg up. Bad low 1. If you think about selling below 13 or 14, look at bar 14. It's a good looking sell signal bar, bear reversal bar closing on its low, but what's the context? And you can argue you'd be trading leg 3 for leg 4. And the later you get in legs, if you're trading leg 2 for leg 3 for leg 4, or later, the probability is greatly reduced. You can do a simple study on this if you can define what a leg is to you, what's a breakout, what's a signal. Look for consecutive signals, look for late legs, and the stats will reflect market behavior patterns. And you'll find that it may not be worth looking to capture, it may not be worth trying to trade a breakout pullback short. So maybe, 5 bar micro channel, 6 through 11. Probably needs a second leg down, but rather than look to buy, rather than looking to sell for a second leg down, might be better to look to buy, because bears selling here are taking the low probability trade. Small risk, they're looking for maybe 1R at a minimum, but is this really a 60 or 70% trade for the bears? Trading leg 3 for leg 4 in a trading range? Probably not. So to me, probably buyers below the low 1. This micro channel needs a second leg up. This gap up and follow through needs a second leg up. And the wedge needs a 2-legged correction. We have 1 leg. It's a simple leg. Here's a pullback, and then probably needs 1 more leg up. 15, I don't want to go bar by bar. I have to go more quickly today, but 15, suddenly a strong looking bull bar, weak bars here, lots of overlap and bars with relatively small bodies and big tails. And then 15, a strong bull bar, but testing resistance, an area where traders got trapped earlier. The bears have the head and shoulders or lower high major trend reversal argument here. So 15, possibly a second leg trap, no follow through. Sellers at the top of the trading range. The wedge has corrected for 2 legs. Now the bears have the double top argument. This is a breakout mode open. Went above bar 1, reversed down. Reversed here, but you really want at least 10 bars for the breakout mode pattern. So reversal down, then we go below bar 1, reverse up, 3 pushes down. The buy above bar 11 is a wedge, opening, reversal, bulls buy, stop order buy above 11, looking for a measure move up. Bears have the double top argument, 3, and lower high, 16. They want the measure move down. So some bears will enter on the breakout down here of the neckline. Bulls probably exit below 16, and bears can sell below 16 and get out above a bull bar or a second reversal. Nothing to buy, weak, stop order by 18 and 21. Is this breakout strong enough to reset the leg count? If we think about always in, so it's probably always in short because of context here, but based on price action evidence, this is not really traditional always in short. The pattern, like I said, head and shoulders top, probably better to be selling below 16. But for always in short, you really want to see consecutive bear bars, consecutive strong bear bars below the moving average, in this case crossing below the moving average, which we don't get until bar 20. So it's probably always in short here, and this breakout probably does reset the market cycle, at least to some degree. This is probably going to get a reaction. This is the dominant feature of the day, and it probably needs a second leg down. So here's that spike, first reversal, probably minor, brief second leg down before a more complex correction. What leg is bar 25? If that's leg 1, here's leg 2, and then maybe leg 3 here. Other traders count it different ways, maybe 15, 21, and 25. You also have the channel line from earlier in the day, 159 and 25. Is 25 a reset of the leg count? Probably not. It broke to a new low, but big tail on the bar. At this point, we have a spike, pullback, and this might be the start. Here really is the start of the channel. If this is a channel phase, bears are starting to scalp. They're going to start buying back shorts at lows and selling pullbacks instead. 24 is a bad stop order sell signal bar. It's a target it's a target to be tested. And if the market does get there, it's probably resistance. It gets there quickly on the next bar, but stronger than the bears want to see. Bulls have a double bottom argument, down on 21, down on 25, reversal up 26. And this may need a second leg up. This is enough sideways. We may test higher, maybe the 24 high before bears come back in. Weak looking rally, 1 pullback, 2 pullback, 3 pullback, 4 wedge double top, bear flag, 34. A reasonable scalp for the bears and a reasonable swing trade for a test of the low. Always in short, probably always in short. based on context with the wedge double top bear flag. And of course, we don't have consecutive bull bars closing above the moving average. So until that happens, bears can sell almost for any reason, but bulls need to exit below bear bars like 30, 32, and 34. Bad high 1 late in this minor channel. It's a pullback. It's either a trading range or a bear trend, but this is not a bull trend. So reasonable to sell above that buy reversal bar, even though it's closing above its midpoint. It's really a bad stop order buy, and a bad stop order buy is a good limit order short. So that's the bull buys above that bar, looking for 2R, maybe even 3R or more. It's a low probability trade, small risk, and structure doesn't really support. Maybe there's a surprise here, but this is the low probability side of the trade, buying above 35. Higher probability, trade in the direction of the trend, and fade the weak breakout setup for the bulls in leg 5. Also near the high of the trading range. So sellers above, tested the lows, but channel phase, probably buyers down here. Is this a major reversal? Well, it might be a wedge. We have 3 pushes down, 9, 25, 45. This is still a minor reversal. Did the market get above a major lower high? No. Big, small, big. This is a strong minor reversal, and it should get a second leg, but the pullback can be deeper than 100%. We could even get to a new low before the bulls get their second leg. This should get a second leg, but for a major reversal, okay, we have a trend line break, but we probably need a retest of the lows before there's any major reversal. For day structure today, it's either going to be a bear channel or a bear trading range day. It might be a reversal day. Here it might be a midday reversal, but we still need a retest of the lows here. But this is strong enough for a second leg. The bulls have strong consecutive bars closing above the moving average. They have 1, they need 1 more, they don't get it. 48 might be a sell, it's a gap bar. First bar completely above the moving average since bar 16, and it may lead to a new low of the day or a test of the low of the bear trend. But this needs 1 more leg. 49, a little bit of a surprise, and probably needs a second leg down. We have trapped traders above. If we do test the 48 low, that's probably resistance. Follow through selling, we get to a new low. The channel is extended down here using 9, 25, and 51. This might be the biggest bear move of the day, but it's occurring in a late leg. We have a lot of trading range behavior and price action on the open, lots of sideways through here. Reduces the probability that it's a bear trend day, and this might be the low of the day. And we might need a better bottom structure. In other words, another test of the low, maybe the midpoint of the tail on 51. And this might need a second leg down, but the downside here might be limited. This was a climactic third leg down, and the result may be a transition into a trading range, and we may even get a test of the third leg down. And if you count legs the way I have them drawn, and there's a couple of ways here. Maybe it's 1, 2, 3, or another way to count the legs. Reset, 1, 2, 3, overshoot of the channel. Big overshoot, but didn't close far below. And after an overshoot, after the channel phase, and we evolve into a trading range, the first target is the start of the third leg. So 48 low, 47 close. That's going to be a test target and expected to be resistance. Bad stop order buy, 51. Probably need a micro double bottom. Strong bull bar 52. Good for the bulls, but again, might need another test of the lows. Micro double bottom 55. Probably always in long because of context, but with price action, we don't have the consecutive bars closing above the moving average. And 55 is a stop order swing trade. Bad sells, tight trading range after a sell climax. Bulls expected to get another leg up after 51 to 53. Pullback probably needs another leg up, which a symmetrical leg takes us above that target. Late in the day, bulls getting their second leg. Might be another second leg trap, like over here. Leg 1, high 2 or high 3, and then a second leg. Good bull bars, but tails above, so buy climax, pullback, buy climax, pullback, buy climax above that major lower high. Closing above, but big tail. Does it get followed through? It's an inside bar. We're at the top of a trading range that began on 24. Market cycle, spike, pullback, channel. Channel evolves into a trading range. We test the start of the channel, which often becomes the top of the trading range in the bear case. So as strong as this momentum looks, if you're buying up here far above the moving average at the top of a trading range and you get a doji like bar 70, might be better to just exit the trade and reassess, maybe look to buy a pullback instead. For a mean reversion, the price can snap back to the moving average in a situation like this when you start to lose momentum, and 70 is a warning that the bulls are losing momentum. Probably best to get out below a bear bar like 71, even though it's small. Micro double top, up, down, up, down. On a very small time frame, this was a bull trend line break, retest, and either the start of a trading range or a major reversal. This bull trend is minor. Look at the chart, the big picture. It's less than 10 bars. So better to sell below 71. And the downside might be limited. The bulls have a strong enough rally to probably support at the 50% pullback. 3-bar micro channel. Probably will get a second leg down. Big up, big down. Usually big confusion, trading range, and may evolve into a triangle with higher lows and lower highs. Big bar 73, expansion, so 71, small bear bar, bigger bear bar, even bigger bear bar. This is a climax on a smaller time frame. If we think in theory there's a bear channel with bars 71 and 72. There's the trend line, here's the channel line, something like that. This is breaking far below that channel line for about a measured move down. I can't get it exact, but maybe something like that. So probably support here. We're testing the trap price here. Bar 66, the bar before this bull breakout. Bad stop order signal usually becomes support. It's also the bottom of a trading range. This is the buy zone. So as scary as it looks, 73, probably better to buy the close 73. Even though it needs a second leg down, the pullback could be deep. Sellers above 73 rather than the close. Continuing lower, but similar to bar 70, big bar for the bears and then a small bar. Where is the momentum? We're at the bottom of a trading range. Range expansion, range compression. Still big up, big down. Testing the buy zone. Below the strong bull bar, 67. Probably buyers here. 75. Reversal. And big enough bar for a second leg. Trap traders selling above 74 would use any bounce they can get to exit, which contributes to buying. The bulls need a second leg up. The bears need a second leg down. That creates a trading range and confusion, and it can create range compression. Again, a triangle with higher lows and lower highs. Ultimately, that's what we got. The bulls got their second leg. The second leg is testing resistance. The bears start selling for their second leg down, and we're out of time at the end of the day. So that's going to be it for today's end of day review. I really appreciate everyone for watching, and I hope everyone has a good night.